Well, good morning from this side, guys. It's the 18th of July 2023. It's 8:38, 8:39, sorry, a.m. here in Ghana, and welcome to our weekly review. And I want to do two things here. Basically, if you watched our earlier video, you're going to notice that market was bullish last week on our futures market, and we predicted the market was going to go a bit higher during our first high impact news driver. So we got our trade rights last week. If you go on the chat and you go and then you replay the video and you look at where the market went to, you agree that market went to our exact location. So just be advised that all these we're doing is not supposed to make you trade with live funds, okay? It's not meant to be a financial advice, but just for educational purposes. All right. So basically later on in November, getting to the end of the year, we are going to have very interactive time. There's going to be a book that's going to be released by my mentor, which is Michael Huddleston, and so we're going to go more interactive on that. But for now, I want to look at I know some of you are new to trading. We're going to have some sessions for you guys, but until then, for now, please follow how the market is being reviewed, okay? And please follow how markets must be traded. You can use the trading plan video I posted earlier on, and have a plan, okay? Have a plan of what you want to do with your funds, and then you can enter into your trading, okay? So use these times for learning and have a plan. All right, so let's go. So guys, this week we're going to talk about market structure shift, and we're going to do market commentary for this week. We are going to go into the weekly charts. I just want to show you guys where we are currently on the market, and we have a high impact news today, which is I think US retail news. So we'll go into that, and then so I want to also do something on a bit of a market structure, but let's do some market commentary first, okay? And as usual, we are going to start with our sentiment market, which is forexfactory.com. So let's go over to our Forex Factory site and check out the news that is waiting for us today. So here is our Forex Factory site. So when you go into it, we have a news which is going to pump liquidity into the market, and so like I spoke to you guys about initially, whenever there's going to be a fresh week, you go into your Forex calendar, and then I mostly like to use this site, forexfactory.com. In my earlier video, which is trading plan, I spoke about how to get the exact time frame, how to set a time frame on the market. Please go on to that video and check it out, and then you make sure that the time frame matches with New York time, okay, so as for you to get the right and exact time at which the news will be released. So like I said, we have one high impact news and then two medium impact news. So we focus on the high impact news. So what do? So we focus on the fact that whenever there is liquidity that is pumped into the market as a result of a high impact news, we try and wait to see how volatile the news event takes prices. So we capitalize on the volatility, and then we look out for where sell stops and buy stops are residing. What do I mean by that? Every high and every low that forms after the news driver, there's smart money. Banks, put their orders. Central banks, if I say banks, I mean most central banks, big institutions, tend to put their orders above those levels. And so they go there to raid those stops. And then they also believe and they know the concept that have been taught to the retail traders, which is the bull flags, the harmonics, and what have you. So most of the time they place their stops at those points, and then they go in for it. So you, being a trader as well, must understand how they behave so that you trade along. Okay, you trade along on how they're also trading. All right, so that is it. So let's just go into the chat, and I would like to show you what I mean by using the liquidity that is pumped onto the market and capitalizing on those highs and lows, and then trading the opposite direction for some profit. Okay. Now look at how. So like I said, we wait after the news event occurred at 8:30 on the 11th of July. We wait for a 9:30 open. Why 9:30 open? 9:30 open because a U.S. equities market opens at 9:30. Okay. Yeah, and remember we are trading futures markets. So futures market stocks, whatever, they open at 9:30. And at 9:30 there's a lot of volatility. Why? Because as market opens, market makers are trying to simply make orders happen for those who have placed their orders, from the previous day. So you expect a lot of volatility and movement, okay, to deliver, people's demand. So that's why you see a lot of movement after the 9:30. Then after the 9:30, you noticed how market went up, took out the high that formed earlier on. Okay, because that is where the stops are resting and are residing. You can see how it came back down, took out the low. Market is trying to go back up, came down, took out the low again before it went to the opposite direction of the market. I think we've gone through this already. So if you look at our earlier market review, you notice how I explained some of these things. Okay, yeah. So that is it. But I want to comment on this week. So I would like us to move on the weekly chart of this week and see what will happen. So this is the weekly chart currently, as it looks like currently now, as of now. So we saw how market went into our expectation, like I said last week, that is likely to take out the old high that rested from last week, and it's likely to also fill into this rectangle shaded area. And we can see last week it almost got filled, it reversed, and then this week you can see it's moving up. With the high back news, with the US retail news that is coming up, I can anticipate the market is going to draw back up and fill that range. Okay, it's likely because when you look at Monday's trade, that was yesterday's trading. I mean, you saw that it's an indication that markets is bullish. That is why it is important for you to wait, and you're advised to wait after Monday to actually confirm if the market is highly likely to be bullish for you to be able to take your trades or not. Okay, so it's very, very important that you note that very well. So that's how we are anticipating market to go like for this week. So for today's trading activities, I would like to see bullishness on the market. I like to see trades that will give me bullish setups. I wouldn't like to see bearish setups. If I say bullish, meaning buys, trades that will give me an opportunity to go long to buy. Okay, because already market has sent an indication from Monday's trading that is highly likely to go high, and we also have a target, which is the gap that you're trying to fill. So that's what we are likely. That's what we are anticipating. Okay, so let's move on to onto the chart. Okay, but first of all, I'd like to talk about a little bit about market structure. Okay. So I didn't mention that I was going to talk about market structure. And what is a market structure? Market structure is simply a technical setup that informs the trader on the direction the market is likely to take. Okay, so for example, if you are looking forward to buy, okay, you're looking forward to confirm a buy setup, one of the things you like to ask yourself is, where is market coming from? Where is the market coming from? Okay, so market is market coming from the bearish side or the bullish side of the market? Was the market trending from the bearish side, or it was trending from the bullish side? It's important. So assuming that market was trending from the bearish side, okay, after it has taken up high, okay, and it is trending downwards, okay, so assuming this is the high it has taken and it's going downwards, okay, so meaning that now market is on the bearish trend, and then we see market go a bit higher. I want to see this leg, and then we want to see this low taken out. Okay, so once this low is taken out, we want to see that the market will buy back up into this swing. Once this swing is broken, we see that the market structure has turned from selling to buying. Okay, once this is broken, I want to say that market has turned from selling into buying. So if you look at the executions that I took, okay, from last week's trading, this is how the market looked like. Okay, this is how the market looked like. So here we go. Market open, went all the way back up. Okay, then we broke above this, so we are selling, and then went all the way back up, came back down, took out the low here, took out the swing, this swing low. Okay, then market rallied up, took out this high. Okay, where? Here. Now before we say the structure is broken, we want to see for a fact, okay, for a fact that this candlestick closes above this swing, then we can confirm that the structure has changed from selling to bullish. So always note that the candlestick has to clearly close above the old swing. Okay, then we can confirm the market is what the structure is, what is has changed. Okay, because if you look at this, if you see this swing, this big candlestick closed below, meaning it was still in a bearish position, so we were in the position to sell. So we're waiting for the market to close, and then at 10:40 the market closed above it, before we took our entries here. And I'm going to talk about this gap in our next video. Okay, and then so buying took place here, and then we saw it go above the high. Okay, so that's how. So this is the entry 44.18, stop loss 44.14. That's 40 pips. With the trading plan video I spoke about, you remember I spoke about stop loss being 40. 50, TP must be maximum 50 pips. So 44.18 above this high would be your take profit. So that's about 60 pips profit. Okay, so that was my setup for last week, and ended up in profit after the news event occurred. Okay, remember the news event occurred at 8:30. We waited for equity open at 9:30 before we took our trades. Okay, yeah, so basically that was it. So it's the same thing that happened here. Okay, the structure here got broken. Okay, it came back down, then we took the buys to take out this high. Okay, yeah, so this is a bullish market structure. Okay, changing the bullish market structure. Okay, so it's the same way in the opposite direction. Okay, it's the same way for us to do the selling part. Let's say market is moving the bearish in the bullish direction, and then we want to see the market structure change into bearish, which is selling. Okay, market was buying, then we want to identify how we can get trades, how we can notice that the market structure has changed from buying to selling. Okay, based on all the criteria I've given earlier on, checking the news, trading after the news and the equity open and all. Then now we look out for a break in market structure on the opposite direction. Then we take our trade from there. So let's look at the selling side. So assuming market was buying, okay, so market took out a high, okay, and then came down and then took out this low. Okay, so once the low is taken, we want to see a trade back up into that, and then we sell. So our TP will be somewhere below this low. Okay, so first of all, someone may like to take a partial around here, okay, before reaching this target. Okay, so we take our trade somewhere around here, and then we sell into the market. So this is what has to do with market structure. So you could see market was going up, 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 and then the structure changed. And then the swing here was broken. Candlestick closed below it. We look out for a trade back up into the gap, and then we sell further. So this is the selling market. This is the selling aspect of the market structure. All right. So that's how to identify a market structure that has been changed from one point to the other. And this is how you trade using the market structure gap, watching the news, looking at the liquidity that has been pumped into the market after the news, looking at liquidity that has been pumped into the market after the equity open at 9:30 US time. Then we look for market structure, entry, stop loss must give you like 40 pips interval. TP must be orders that are resting above highs and lows. Now, this strategy actually counters a certain retail concept. What retail concept am I talking about? Now, you notice that retail will see, assuming you see a setup like this, retail will see this as a bull flag or harmonics or whatever it is. But this strategy helps you to understand the opposite of that. Okay, meaning once market trades above it, we see it as a stop hand. Okay, stop hand, meaning there are orders that are resting there that big institutions go there and then take out the retail stops. But retail rather uses that concept as harmonics and bull flags and whatever. It's interesting to see these setup I showed you earlier on happening on the market every single day, every single time. And you notice that after the structure was broken and we came back down, market came all the way back here. Notice how we use the highs and the lows rather as targets, not as support and resistance. It is important for us to learn properly. Okay, those highs and lows are not used as support and resistance. They are real support and resistance theory that I'm going to talk about after talking about the gaps. Okay, and I'm introducing it just a little bit. Okay, the highs and the lows of the market are not used as support and resistance. Okay, sorry, they are not used as support and resistance, but they are rather used as a form of a target where price is likely to trade to. If you notice the trade setup I took, you can see that the high was actually where I actually anticipated and it took my profit from. Not the place where I'm now trying to put buy stops and sell limits there. No, you're going to have issues when you do that. So this is high-tech algo trading introduced by my boss, Michael Huddleston. And it works, guys. It works. So I hope this has been insightful. I hope you've had enough. I hope as time goes on, as more videos come, you can grab some concept out of it. So until we meet again, I wish you a wonderful trading today. See you at 9:30 Equity Open.